Hello and welcome back to the channel. I hope everybody is doing fantastic. Before I dive into Bitcoin's price analysis, I want to thank two people for leaving a comment yesterday. I replied to both comments. I always do. The first one is Xeonophon, much appreciated. That was kind. And the second one is Bits Pulls. I hope I'm not butchering that. Who actually made a request to add some additional content in the next Bitcoin video. I fully appreciate that because this is exactly what I was looking for when I invited all of you viewers and listeners to leave a comment. The point of leaving a comment, I enjoyed so much when they are constructive, meaning you get something out of the video and it opens new questions for yourself, or you want to explore other areas. Then you write it in the comments, and if I can fit that in the next video, I'll happily do so. And this is what I'm gonna do for Bitpulse in the second part of this video. So stick around. For the moment, I want to take a look at the micro count, or should I say the nano count for Bitcoin, because we had something happening yesterday. Price went down as expected. I think I was looking at 59,121 as a potential end of wave 5 within 3 in brackets. But given the not the sharpness, but the speed at which it went down and the kind of V bottom, I need to revise the counts. Let me explain. We went below 59,121 or 125, and we stopped at actually one extension Fibonacci 854, if I'm not, yeah, it's here. So that is a pretty extended wave 3. It's possible, it's probable, yeah, to have wave 3 with this kind of extension, but usually when there is one, it indicates that it's the last push of either the sellers or the buyers, but in this case the sellers, to complete a move. Because after this low, which theoretically completed wave 3 in bracket that we started up here, you would want a wave 4 in bracket. A wave 4 has areas of resistance as defined by Elliott wave theory as guideline 59,923, so 59,923 up to 61,037, and this is this region on this level here, 50%, 61,037. That is not a guideline, but it's a rule. Wave 4 must not go above or below this level. In our case, above, because if price does, then that means you don't have a wave 4 unfolding. You have something else, and so I need to scrap this level of resistance from the chart. I'm also going to remove this wave 3 supposedly fib extensions, and we need to take a new look at the count, because it was not from the wave 2 in bracket. There was no sub-wave application. There is a possibility, a probability that indeed we completed the C leg correction like this. From the top, wave 1 as a leading diagonal, an ABC as an expanded flat for wave 2, and then you have a wave 3, another ABC for wave 4 in brackets, and then you finish by a last flush for wave 5. So theoretically, wave 5 of C completed, and therefore wave 2 in yellow or wave 4 in red completed as well. So I want to also take a look at the indicators to see what they are telling. If I look at the bottom of wave 5 of C, we had the RSI go oversold, make a bullish divergence compared to the most recent low of wave 3 in brackets. So far we have a divergence. This is what we want to see. We want to see momentum divergence between the top of a wave 3 and the top of a wave 5. So far so good. Now, if I take a look at the volumes, even though it was a lot of selling volume, it was bought afterwards, because we have this very teeny tiny candle body and this long wick below. So price went down and went back up. The amount of volume is very similar to the amount of volume we got when we did the top of wave B here. So such amount of volume marked an inflection point. We can make an assumption that such amount of volume can mark again an inflection point until proven otherwise. So that's two in the side of three elements: the recount, the bullish divergence, and the volume that indicates there is a likelihood that the bottom is in for this correction. Now, if you take a look at the RSI again, you have another divergence, but this one is not bullish. Yeah? The RSI is going higher, but the price hasn't broken above the most recent high. So that's an area to watch for. If I look now at the future markets, because I want to see if the paper trading market is aligned with the spot trading market, we have a bit of a mixed bag. Here is the top of wave 4 in bracket. Yeah, that's the red line. If you look when price was going down with this last flush, which represent our potential understanding that the wave C of ABC topped here, bottomed here. I have trouble with data. Look at the delta. 3 consecutive candles of aggressive negative delta. So shorts were piling in. Yeah, people were selling. For the last candle that marked the supposed bottom, we had a very long delta, much more than the previous one, yet it closed higher than the close of the previous one. So that is probably an indication that as price went down and broke the last low made early October on the 3rd, a lot of people opened short position here, breaking this low. Some stop orders from the buyer side were taken as well. But actually, a lot of people shorted this area. That's the aggressive selling. Yeah. So it seems that a lot got trapped. Yeah. They were expecting further downsides, as was I. But the delta, the last candle going down and then up and closing higher than the previous one, is an indication that there is a change of heart at this level from between buyers and sellers. And if you look at the open interest, so on the way down, the last leg down, we had open interest going down. That's an indication that long positions are closing, which makes sense. Yeah, you see price go down. If you are long, then you close your position. And I think that was an indication that could have, it's an observation that could have indicated early on before the bottom that we may actually reach a bottom sooner than expected. If price goes down and open interest does not go up, that means no new shorts are opening position. Yeah, because this is how it works. Price goes down, open interest shoots up. That indicates a lot of short position are being opened. It was not the case here. Actually, the longs were closing. Yeah, so long traders got probably worried for their position and considered that the low of October the 3rd would be taken and we would go lower. They closed their long position. But now there is a lack of enthusiasm from buyers on the future side because price went up, but open interest keeps sliding down. So price going up, open interest going down, that means shorts are closing. It also makes sense, right? If you're short, you don't want to be having the price going against you, so you close your short. Given this last candle, you may think the bottom is in, so we are not going to go any lower, so I close my short. If, and that's a big if, if this was truly the bottom, we would have seen a candle with shorts closing, okay, on the next candle going up. That is probably this one here. But then as the price goes up, you want to see long position being opened. If the buyers are believing that this is the bottom, then you want to see also confluence with how they take their trades. Now we just have a confirmation that with this move up, shorts position have been closed. Why is that? I don't have the answer yet. If we are to break this red line, it's not really on the top, but it doesn't matter. If we are to break this red line, which is the top of wave 4 on the spot market, and we see open interest shooting up, hey, that's a good indication the longs are piling in. But usually when longs are piling in at a break of a resistance, that's probably something to be cautious about. Yeah, it wouldn't be the first time nor the last time that price break the resistance, longs pile in, and then it went down again. So for now, we don't have a clear direction given by the futures market, except that the shorts have closed their position on the way up. That's it. Now, if I go back to the spot market, the red line I was drawing on the futures one is this one, exactly. Yeah? So if we were to see price on the spot market break this one and we see the RSI continuing, then this would invalidate this bearish divergence that appeared here. Okay, so this RSI would be good. We would like to see also some volume, yeah, on the break of this top of wave 4. Now, I was saying the fact that it appears that wave 5 of C has bottomed indicate that we probably go back up to continue with the wave 3 in yellow brackets or wave 5 in circle red. But there is another thing to consider. This move is down up until this point. Yeah, so we have 3 and 4th. But this one is not a 5th, is a 1 of 5th, a 1 of 5, should I say. And there is a possibility that we see a 5th wave, this one here, go like this, making an ending diagonal. Something, it's hard to draw with the mount, but you get the point. Making an ending diagonal with another 5 wave inside. Yeah. This is something to be watched. If we fail to break this, I think if we break above this red line, you can scratch the idea of a ending diagonal, like I was drawing poorly, because you cannot have a wave 2. So that would be the 1 of the ending diagonal. That would be the second one. You cannot have the second one go past by the beginning of the first one. Yeah. So that would be another confirmation that the bottom is in, even though it didn't go as far as we thought. It's possible. It's probable. It's probable. So this is something to watch for. Break the red line, cancel the divergence, look for volume, check on the open interest to see if the open interest is rising as we break the line. And then you may have a stronger confirmation that we indeed bottomed. Yeah. So that's the approach. And we would then look for 5 wave up to start either the yellow count or the red count. And this next part is for you, bit pulls. A quick recap on the yellow counts versus red count. So I'm gonna hide the macro part, the micro part, because it's too messy. The yellow count versus red counts. Both of them start from the same genesis, which is the assumption that this low we made at 48,983 on August 5th is the final low of this long correction prices have been into since mid-March. And this correction took the shape of a WXY. Perhaps I move to the 4-hour. Going to be easier, of a WXY. Okay, you have your W, your X, and then your Y. And from this low here, we go up. We go up in 2 possible ways. until invalidated, okay? So either we go up in the yellow counts, which is a bullish impulse. So you have 5 wave up in yellow for wave 1. Then you have 3 correction for wave 2. We're still in yellow 2. And from that point on forward, you can extrapolate a minimum expected target for wave 3 circle. Here you have your first, second, and then you take fib extension, and that gives you 83,084 cents. Okay, minimum expected target. Yeah, minimum expected target. That's how I label it usually. Can be lower, can be higher, but that's at least in the grand scheme of things where we should aim for wave 3 in circle. So from this low here of wave 2, circle yellow, we start walking towards 83,000, but not in a straight line. We want to see 5 wave move up, yeah, as an impulse. We have 1, 2, 3, 4, 5. That makes wave 1 in brackets of wave 3 in circle. And from the top of wave 1 in brackets, you expect a wave 2 in bracket to form in a shape of an ABC. This is the correction that probably has bottomed yesterday. Yeah. From this point forward, you want to see a 1, 2, 3, 4, 5 to reach wave 3 in bracket. So from wave 2 bracket to wave 3 bracket, you want 5 up. Yeah. And then another 3 down for wave 4 as a correction, as an ABC. And then another 5 up towards wave 5 in brackets of 3 in circle yellow. So that's the bullish count for the yellow scenario. Okay, this target here, I tend to consider 74,550 as a minimum expected target, but depending on where actually wave 2 in yellow bracket bottomed, this target may shift here and there. For now, I don't have a confirmation that we actually bottomed this correction, then I will leave it here, yeah, for the moment. 74,550. And in all consideration, I don't think that wave 2, from wave 2 to wave 3 in brackets is gonna be an easy ride, because we will inevitably bang our head, or the price will bang our head against this descending trend line, which has been capping the price down since mid-March. Okay, so here there might be some activities when price do get there. Now the red count is also a bullish one, but is a delayed bullish one. What I mean by that is that the red count is actually a diagonal, probably a diagonal. And the diagonal, we have it in wave 1 diagonal, 3 down for wave 2, circle reds, and then 3 up for wave 3, circle red, and then 3 down that we are talking about for wave 4, circle red. Now what we want to see is another 3 up for wave 5, circle red. And essentially you would have something that looks like that instead of having something that looks like that. Okay? Now once this red count diagonal completed, you will have to expect, regardless of where, or should I say, regardless of where wave 5 completes, whether it does it here at 69,000 or a bit lower, you will have to expect a 3-way pullback towards some unidentified zone of support at the moment. But this 3-way pullback would be actually your wave 2. And this diagonal is actually your wave 1, and then second, and then back up. I need to take some drawing lessons, but you get the idea. This diagonal price movement, if this is indeed the scenario we're playing, then it is only a wave 1 of an impulse. Okay, and then we would have 3 wave down for correction wave 2. So both yellow and red are bullish. Yellow is bullish sooner than the red one. Now, these two counts, they are valid for as long as price do not break. Let me remove this so that it's clear. For as long as price does not come to break 52,550 on this Binance chart. Because if price comes and breaks that down, whether it's now or once the move is completed, I mean the move after bottom wave 4 and wave 2, then that's an indication that you invalidate both wave 2 in yellow, because you cannot have price going down below the start of a first wave. Here you have a wave 1 in bracket. So essentially the wave 2 in bracket would actually invalidate scenario yellow. But if we are right on the assumption that we bottomed here, then it's not going to happen for this move. So we save the yellow count. And the red count is the same deal. If you break this, then you would have a diagonal extremity, the number 4, that goes below the number 2. You cannot have that. You can see sometime thrusts going for the last part, yeah, but it's not possible. You have the odds number, or even, I never know in English which one is which, 1, 3rd, 5th, they're rising. You expect the 2nd and the 4th to also rise. Because if they are not, then you don't have a diagonal anymore. You do have a kind of a broadening wedge megaphone pattern type of activity. Okay, so 52,500 is key. Now it is key. It's actually very key. If you break this, they increase the odds that we actually gonna visit this level here, the bottom of our expected understanding of the end of the wave 4. Yeah, if you do break that, then that indicates it was not, the correction since mid-March is not over. There is a missing piece of the puzzle. And this missing piece, it could be, but this is a big speculation. Huh? It could be, instead of doing a W, X, Y, so you have 3 for W, 3 for X, and another 3 for Y, what price could be doing is not a WXY, but it's the WX. So far, we're still good. Y, we're still good. And then you have probably, and I say probably because it's not certain, X and a Z somewhere, Z or Z. And this Z wave is expected to unfold in 3 down, 3 up, and another 3 down. Yeah. So probably if we break the bottom here, then we go for more downsides. The good news is, because there is always good news, and that's why Elliott is important, because it gives you levels of invalidation and it helps you therefore remove any emotional bias you may have. If indeed the wave 4 is meant to end somewhere here, then it cannot end lower than 42,920. Yeah, if it does, then that's not a wave 4 and we are in much bigger trouble than we thought. So probably wave 4 comes and ends there if we break down this 48,983. So we're not there yet, so there is no need to start speculating about that. It's good to know that there is a possibility should an invalidation level break. This is what they are here for, to give us alternative scenarios. But yeah, for the moment, what is of interest is what Bitcoin is doing with the micro counter. It's I don't want to say nerve-wracking, but it's interesting to see the development. And since I've been speaking, and not much has happened on the future side. You can see there is no change for the open interest. We are below this resistance level. Perhaps might need some catalyst. But yeah, so the assumption as a summary is we probably have topped for wave, let me bring it back, for wave 5 of C of either 4 in red or 2 in yellow, probably. Should we fail to break this and head back down with open interest going up as we go down, then that increases the likelihood that this one is not done and that we will be forming an ending diagonal to come lower, probably 58,040 or 56,614. Yeah, but we are closer than we were yesterday. Break this level, cancels the divergence on the RSI. I want to see some volume, but I also want to see 5-wave move to make a wave 1, something like that. A1, A2, a third, fourth, yeah. And within this wave 1, I want to be able to count 5 subwaves, okay? That's it for me. That's it for the video. I hope you enjoyed it. Let me know in the comment what added value it provided to you. And BitPulse, I hope you liked my clarification, that the recap was good enough for you. Yeah, that's it for me. Enjoy the rest of your day. Give a like to the video. It's much appreciated. Also subscribe to the channel. And I will speak to you very soon. You take care. Bye-bye.